record this as well. And we are going to archive it on our website. We are actually redesigning our website, and when it is completed, hopefully it'll be new and fresh, and we'll be doing a lot more of these webinars, a lot more videos that are being posted, including some of the time that I am on RFD TV. We'll be able to archive it on our site after we go through the redesign phase. So hopefully this is a good meeting for everybody that has joined us here tonight. If you're unfamiliar with our company, I'm going to take just a few seconds to tell you about us, and we'll get into the meat of the presentation. Our brokerage and advisory firm founded 15 years ago, and we've been clearing through R.J. O'Brien. We have 7 offices in 6 different states, and most of our concentration is in the Midwest: Missouri, Nebraska, Iowa, South Dakota, North Dakota, and Minnesota. I am sometimes heard on RFD TV. We are featured on the DTN radio network called Your Ag Network that goes throughout the upper Midwest, Sirius Satellite XM Radio, many other radio stations throughout the Midwest, as well as the Minneapolis Grain Exchange. And from time to time, we'll be quoted in the Wall Street Journal, Bloomberg, Reuters, many other print media. In fact, we have a newspaper circulation throughout most of the Midwest through our newsletter that appears in that. So our company founded with the intention of offering full service brokerage work and advisory to our clients. We do offer discount brokerage service along with some trading platforms. So with technology advancing, you can trade from your phone, your computer, yourself. If you want a discounted rate, it's a great way to do that. You can get instant market quotes for a very nominal fee as well. $5 a month is also very discounted rate there. We also offer a hedge program that we will talk about a little bit more later on. Several different newsletters, options and opportunities there. Daily newsletter, our trader newsletter that's designed specifically for spec traders, our weekly newsletter, and we are doing more and more video comments. That is very popular. So we're doing more and more video, do a lot of audio commentaries as well, and we have a text message service that sends information through text, market quotes, as well as any market information such as when the crop report went out today, as well as our Twitter feed. So a lot of ways to keep track of what's going on with the markets these days, and we hope that you are choosing us, or thank you that you're attending tonight's session to learn more about the markets. So, definitely a bearish report day today. We're going to look first at some of the information that was in the report, and then we're going to talk about some different marketing strategies. But here's a summary of the USDA crop report that came out today. And as I said, it was a very bearish report, and mainly because of the production figures in corn and soybeans. Corn production did not drop near as much as what the trade had anticipated. And this chart that you're looking at now does show that. It shows a yield of 169.5 bushels per acre. Harvested acres at 83.5 gives us production of 14.153 billion bushels. And that is down slightly from last month and well below last year. It's a billion bushel reduction from last year. And we're going to talk a little bit more about corn here in a second, but it is bearish from the standpoint it was much more than what the trade had anticipated. In soybeans, we are looking at 4.381 billion bushel crop there. And how do we get there? Well, record harvested acres projected at 88.7 million with a yield of 49.4. Now this yield number is down considerably from last year. Both the corn and the soybean numbers are down from last year. And if you talk with anyone from around the Midwest, so specifically Iowa or South Dakota, their yields are going to be down significantly from this last year when we had record yields. And the USDA does reflect down from last year, but it doesn't reflect what the trade was anticipating. You look at the range of estimates there. Soybean yield, even the very top end of the range of estimates barely caught this yield. The harvested acres right in line, but the production number was not even close to the range of estimates of 4.381 billion bushel crop. So a much bigger crop than what the trade had anticipated. And this crop of soybeans, the yield is down, but because we have more harvested acres, we are going to produce the biggest crop in history. So overall bearish day, and as we look at more of the individual commodities here and what happened, USDA did lower the yield by 1.2 bushels per acre. It is down significantly from last year. I think everybody knows the yields will be down from last year, but it was not as much as the trade had anticipated. There was some estimates out there for a 5 bushel per acre drop, and when we only saw 1.2 bushel per acre, that really threw the trade for a loop. Now, crop ratings were the lowest in 10 years, and that does suggest smaller yields in the future from the USDA, and it's not a complete surprise that they would be cautious or slow in lowering yields. They do not have a lot of test plot data harvested yet that would give them a suggestion that anything but we have a trend line type yield. So they did bring the yields down from last month and well below year ago levels, but this current yield suggests the third largest crop in history, which when you put it in that perspective, I think a lot of people don't believe we're going to get to that area when the crop ratings are at the lowest in the last 10 years. From a demand standpoint, there's not a lot to take from here. Stocks only dropped 52 million bushels as the USDA lowered total usage by 50 million. One thing I do want to point out is if you look closely here at the total production number 14.153, and we look at total usage, that's 14.3. So we're actually using more crop than what we're going to produce this year. And I know we probably talk about this every year, but at some point when we have that crop failure, that's when we'll see the prices really scream higher. It doesn't appear we're going to have a huge crop failure this year. Yield's certainly going to be down from a year ago level, and the stage is set here for a huge run up in prices, but in the next several months it doesn't appear to be the case, as it does look like if the USDA is accurate, yields are going to be large enough supply, and because we have 14.53 billion bushels of total supply considering last year's stocks to go along with this year's stocks, and our ending stocks very much a burdensome supply of 2.273. So that's all the bad news. Getting kind of a lot of bad news factored in here. Let's look at maybe some good news. If you go back up in this area, our weather cycle has changed in July. In fact, it changed about the July 4th, and this was kind of an old weatherman's trick that Elwin Taylor from Iowa State gave to me. He said, he talked about weather cycles and how they change every 6 weeks, and it's pretty accurate as a guide. Right around the 4th of July was when we expected temperatures to cool and turn a little bit wetter, which is what they've done. In fact, our weather person that we follow was just talking this afternoon about how the month of August is one of the top 5 coolest August so far that we had in history. And this weather pattern is going to change again. Right around August 14th, we're going to change from a cool and wet type pattern back to a warmer and drier. Now, that doesn't mean we're going to have 6 weeks of real hot and real dry, but it does mean that the pattern will start to change. The weather people that we have followed do suggest there is going to be very cool temperatures at the end of August and into September, cold enough that we're going to be talking about frost. And I do think that's going to be significant when we talk about marketing, where these markets are going to factor in. Now, another positive here is more research. This is a seasonal research company. They indicate buying corn August the 12th and holding till about the 25th or 26th of the month has worked 87% of the time, or 13 out of the last 15 years. Last year, if you remember, we had a record yield in corn, all-time record, and about the 30th or so, 31st of the month of August is when we put our early lows in. And I do think we are very close. If we haven't today, we're probably very close to putting in some sort of a early autumn low as we get into harvest. So we'll talk more about that in a minute, but these are the highlights of the corn crop. We'll look at the soybeans next. Production here increased 1.4 bushels per acre. That was a major surprise to the trade. It is the second largest yield in history, down from last year is all. But This is the largest yield forecast ever for the month of August. Last year, they weren't predicting this size of a crop, and the crop kept increasing in size as we got into the actual harvest data, and that's when the USDA increased their numbers. But for this time of year, this is the biggest soybean yield ever. And the question that a lot of people have been asking today is, how is that possible when we have good to excellent ratings, 60 to 62%? This isn't a very highly rated crop, and it's a fair question that the USDA will have to answer for at some point. It certainly put us on a tailspin today, and someone remarked to me that we could be limit down, and at least we're not limit down, and there was a sign that there was a lot of end user type buying coming into the market because we did not go into a limit situation. Highlights of soybeans: look at your usage. It's up 66 million bushels. That's a new record, and it's 150 more than last year. So again, similar with corn, we're using a tremendous amount of soybeans, and even with a record crop this year, we look at our total production is 4.381. That's this year, and we're using 4.301 billion bushels. So again, we're a crop failure away from having an explosion in prices, but it doesn't, again, look to be this year. Want to point out, insurance guarantee set last February is at 1017. So if you've been able to make some sales, you do have a little bit of price guarantee here through crop insurance. It's not as good as having sales on the books or put options or anything like that, but it is something to keep in mind when you make marketing decisions, as you do have a guarantee in insurance. And we already talked about the forecast for that dry and cool weather fueling ideas of yield losses. I think the soybeans will be the most vulnerable to a frost scare, especially when we have very cool temperatures here in August. It kind of slows the growth, but corn will be susceptible, beans will be susceptible, and certainly if we get another rally because of cool conditions, frost scares, that is when we will see a rally in prices. There wasn't a lot of things to talk about in the wheat market in here. Minimal changes to the balance sheet. We have no winter supply issues, but the hard red spring numbers are tightening. This is approximate numbers of ending stocks. Hard red spring about 140 million bushels in the winter, 450. Soft red winter, 240. Right now, the price on Minneapolis wheat suggests that producers store the crop till December. We had went into most of the rally in the spring timeframe from that late May into early July. September was leading the price rally, and now that has changed where December's holding a decent premium over the September contract, suggesting that producers store for December, but don't store any longer than December if you're holding spring wheat. What this market, I think, is telling us is there should be at least one more rally attempt in that spring Minneapolis, another rationing phase. The market has pulled back significantly from its July highs, and we'll talk more about this here in a second, but the Canadian crop is the next one that really is not seeing any real threats to the crop. But if we did see something, we could certainly see another rally, or after it gets harvested, that's when the next rationing phase should begin. So we're going to move off of this topic and move into some chart and looking at some chart-based ideas of where the markets may go. Like as I said, if you have any questions, please go ahead and type it in that chat box, and I can go ahead and respond to you there. This is a chart of soybeans, and you can see this big down day today, big outside bar here located in blue. We traded through resistance early in the morning, and obviously through this major support area by late in the afternoon, falling to where we ended. And we're seeing a little bit of a gain here overnight. We're up 3 3/4 cents. This is your next area of support down here on the daily charts. We get back into this 915 area where we rallied from, and if we look at a little bit broader perspective, a weekly chart, you could take this support all the way back into July of 2016. So this is an area that the market should have bounced from, and it did in June. If we get down into this area, again, that's a next area of support. After today's movement, you can see we go back to this support. If you go back into 2015 and 16, this is down in the upper 870s, 875, which again should act as good support. We've really been in a narrow range in beans from about 1035, 1040 to 915. We're in the bottom end of that range. If we get some sort of a weather issue, and again, this is going to have to come from a frost scare most likely, we get back into the 984 all the way back into 1005, I would suggest that that is a place where producers really need to become defensive. As we looked at the fundamentals of the market just a minute ago, the fundamentals suggest that we're going to have big supply, and this crop needs to be protected, or the downside needs to be protected. So one more weather scare up into this area, anywhere up in here from, a rally from 940 to 10. If we use some retracements, 987 to almost $10 is your major retracement zone, and that's where I would suggest that we're going to see some sort of a technical recovery. Okay, let's look at corn next. We'll go back to a corn chart. We broke key support here. 375 had been holding key support, and we broke through that today. In fact, we traded again, like soybeans, above some resistance and down through support by end of the day. Here's a seasonal pattern that shows this rally that we were talking about from more research till about the 22nd, 25th of the month. And then prices do move lower. This was the low that was charted about a year ago, and we'll flip to a weekly chart. We can kind of see that as the market moved into this time frame right in before Labor Day is when we put a bottom in and started to have a rally, although it was a small rally. I don't expect, with the numbers that we saw today, we're going to see any additional weakness past this point. Certainly there's your support area around 366. That should be a strong area of support, and it's probably unlikely we're going to go below this low, which is around 358 and a half. And on the upside, you're looking at from 407 to up to this 420 area as major resistance. So again, with the crop size right now not known but anticipated by the USDA, it suggests that rallies are meant to be sold. But if you're going to store a crop, I think it's the corn crop that I would be preferably storing over soybeans, because the uncertainty about this corn crop, especially in the Western Corn Belt, you should see a big improvement in basis, as there's a lot of ethanol demand, a lot of livestock demand in the Western Corn Belt, and that will benefit you from having storages if you can capture some of that basis and the market carry. But if we look at retracements again, and that's how you should play a little rally in here. If we've made a low today and we do begin to rally, again, you get back to $3.95 to $4 or $4.05. That is certainly the point where you want to be looking at making sales if you need to generate some cash flow. So that again takes you back to the pre-report highs, 385 and into this $4. You can see we spent a lot of time up in this area between 385 and $4 most of the growing season, in fact. So that would be my suggestion on corn sales. If you have to generate some cash flow at harvest, beans have the most downside risk on a rally, and then of course storing the crop, looking at the corn market and selling the carry that's offered. Did I see the FSA numbers for wheat for abandonment? Yes, I did. They had 614,000 prevented planting and 791,000 wheat acres that were considered failed at this point. So overnight, Minneapolis wheat is rebounding off of, I think off of this news as much as anything. It's up 8 cents. Chicago, Kansas City are just a couple cents higher. So pretty big numbers of failed and prevented planted numbers. And this was the first one of the year, excuse me, from the FSA, and they will be issuing more statements on a monthly basis. As far as wheat, and we talked about Minneapolis, This is a chart of daily Minneapolis wheat, and really a lot of pressure here in the Minneapolis. It has come down quite a bit, but I think if we look at maybe a weekly chart, you can see it's pulled back and still what I would consider to be a place where we should get some sort of a rally. I think we're going to have a retracement in here. That's what the market's trying to do as the Canadian crop gets harvested. And I would suspect we don't go any lower than 695 and maybe not even lower than what we did today because of the FSA numbers. But we should see some sort of a rally back. And I don't suspect we'll try this 843 area. I am looking for more in the lines of a rally back into the $8 to $8.10 area to go ahead and start making sales. Our hedge program, our newsletter is 50% sold of our spring wheat, and we're going to try and sell the rest of it into December delivery, as we don't want to store the crop any longer than that. And then finally, we'll look at Kansas City. You can see this market here has retraced almost all of its gains. In fact, it has retraced all of its gains. This is a December Kansas City chart here. This was the spring rally that Minneapolis took on, and Kansas City has given it all back, coming back into these areas. And again, this is an area that, go back to weeklies, this area here that we're getting close to after the drop in prices today, I think you're finding good solid footings between 460 and this 470 area in Kansas City wheat. So we're also 50% sold of Kansas City, and this may be an area where you would look to re-own some of that rather than make sales. But I think with the big supplies of wheat, especially the winter wheat, that there's little upside, limited upside potential. Rallies back up into the 540 to 550 range are going to be sold. So overall, I think we saw bearish numbers from the USDA today. I would suggest this is probably the largest corn yield estimate that we'll see, and they will shrink from here based off of the crop conditions that we have noticed from the USDA. I think your yields do start to come down from here, and should give us some upside potential, and it does make the crop worth storing until we get a better handle on this crop. So if you have any other questions, go ahead and send them out. Otherwise, I'm going to thank you for your time once again and your attention in the meeting tonight. We went about 25 minutes or so, and we will, be updating things. If you go ahead and sign up for a free trial. If you're not a client, you can sign up for a free trial at our website to receive newsletters, audio commentaries, and our hedging program. That is available at our website. We're redesigning the website, as I said, to make more of these videos available for everyone. So we hope you enjoyed it tonight, and look forward to talking with you soon. I'm going to go ahead and sign off here. Have a great night, everybody, and thanks once again for your time.